If you were born between 1951 and 1959, I need you to stay with me through this entire video, because what I am about to cover directly involves your Social Security account, a specific payment that may have already been calculated in your name, and a single verification step that is quietly preventing that payment from reaching your bank account. This is not about applying for something new. This is not about a program most people have never heard of. This is about money the Social Security Administration has already processed and set aside for you. Money that is sitting in a queue right now, frozen, not because of any mistake you made, but because of a new verification requirement that nobody sent you a letter about. I have spoken personally with seniors born in the 1950s who had no idea this payment existed, who assumed their Social Security was correct because they had been receiving it for years without complaint, and who, after one phone call, discovered a retroactive payment averaging between $2,400 and $8,500 had been calculated for their account and was waiting to be released. That call takes less than 15 minutes. By the time this video ends, you will know exactly what to say when you make it. We are already in the final days of June. The window to act this month is closing. Do not close this video. My name is Sophia. I have spent 7 years working with retired Americans on Social Security claims, benefit recalculations, and federal entitlement programs. What I do on this channel is monitor every SSA policy update, break it down according to who it affects, when it affects them, and what specific action is required, and deliver that information while there is still time to respond. The people who watch this channel do not get caught off guard by rule changes they never heard about. If this is your first time here, subscribe right now and turn on the bell notification. Social Security regulations are changing more frequently in 2026 than at any point in the past decade. When rules are revised, the SSA sends a standardized form letter to a general mailing address and moves forward. Nobody calls to clarify what the change means for your specific birth year, your benefit type, or your individual financial situation. That is what this channel exists to do. Subscribe. Let us get into it. Before I walk through the details, I want to address two groups of people who are already convinced this does not apply to them. Both groups are wrong. The first group is the senior born in the 1950s who worked entirely in the private sector, never had a government job, and is thinking, the WEP and GPO don't involve me. I can skip ahead. Do not skip ahead. Only one of the 3 issues I am covering today involves WEP and GPO. The other 2 apply to every person born in this decade regardless of employment history. The earnings record review and the benefit calculation verification affect private sector workers at the same rate as government employees. If you have never independently confirmed that your Social Security benefit was calculated correctly, and most people never have, this video is for you. The second group is the senior who has been collecting Social Security for several years without any problems and has concluded that everything must be in order. The account runs fine. The deposit arrives on time. There is nothing to investigate. Here is why that reasoning is dangerous. The Social Security Administration processes tens of millions of accounts through an automated system. That system calculates a number and sends you a check. It does not audit your earnings record for accuracy. It does not flag cases where a required adjustment was never applied. It does not send you a letter explaining that a provision exists that would increase your payment. The check will stay at the same amount indefinitely until you initiate a review. The seniors who receive the full benefit they are owed are not the ones who trusted the system to get it right automatically. They are the ones who asked the right questions at the right time. Before this month closes, this is the right time. If you were born in the 1950s, you are currently somewhere between 66 and 75 years old. That means you are either freshly retired and actively navigating Social Security decisions in real time right now, or you have been in retirement for up to a decade, receiving a fixed monthly payment that you have never independently verified.
This is the most consequential window of your entire Social Security life. Not because of what is coming, but because of what may have already happened without your knowledge. Here is the background. In January 2025, the Social Security Fairness Act permanently eliminated 2 provisions that had been reducing benefits for millions of Americans for decades: the windfall elimination provision and the government pension offset.
If at any point in your working career you were employed by a state or local government, a public school system, a federal agency prior to 1984, or any employer that did not withhold Social Security taxes from your paycheck, and you are currently collecting Social Security, your benefit may have been reduced under these provisions for years. The Fairness Act changed that permanently. The SSA began processing recalculations and distributing retroactive payments to affected individuals. Retroactive payments for people born in the 1950s who were subject to both WEP and GPO are averaging between $2,400 and $8,500, depending on how long the reduction was applied and the size of the original benefit. That money has been calculated. It exists in the system. It has your name on it. But here is the problem. Before the SSA releases a recalculated benefit or a retroactive payment to someone born in the 1950s, it now requires direct confirmation of current banking details from the recipient themselves. This means that if your direct deposit information has been updated at any point in the past 3 years, a new bank account, a switch to a different institution, a joint account that was closed after a spouse passed away, your payment may be sitting in a suspended status right now, waiting on a verification step that nobody reached out to tell you was required. And here is the part that matters most. The SSA is not going to call you about this. They are not going to send a follow-up notice. The payment will remain in the queue, frozen, indefinitely, until you pick up the phone and confirm your banking information is current. We are in the final week of June. If you make this call before the month closes, the processing timeline works in your favor. Every month you wait is another month that retroactive payment sits in the queue, not in your account. Now I want to address the second issue, and this one applies to every person born in the 1950s, regardless of whether you ever worked for a government employer. Your Social Security benefit is calculated using a formula applied to your average indexed monthly earnings, called your AIME, which is derived from your highest 35 years of inflation-adjusted income, as recorded in the SSA's Master Earnings File. I want you to focus on that last phrase, as recorded in the SSA's Master Earnings File. The SSA has acknowledged in congressional testimony that its earnings database contains inaccuracies affecting a significant percentage of accounts. Errors in the earnings record are not rare exceptions. They are a documented, ongoing reality of a system that has been processing hundreds of millions of wage reports every year for over 80 years. The most common sources of earnings record errors include self-employment periods where Schedule SE was filed, but earnings were never properly posted to your SSA account, employment under a maiden name that was never reconciled after a Social Security card update, employers who used an incorrect Social Security number on wage reports, a clerical mistake that is more common than most people realize, military service earnings subject to special crediting rules that were never applied, years where a seasonal or part-time employer simply failed to report your wages correctly. For a senior born in the 1950s, a single missing year that understates lifetime earnings by $18,000 can reduce your monthly benefit by $40 to $80, just permanently. That is $480 to $960 per year for the rest of your life, plus retroactive recovery of the underpayment going back to the date the error first affected your calculation. For seniors with peak earning years in the late 1990s or early 2000s, which is exactly when many people born in the 1950s were at the height of their careers, the impact of a missed or understated year is even larger. Here is the critical reality. The SSA will not audit your earnings record on your behalf. The review must be initiated entirely by you, and the window for correcting certain errors shrinks over time as underlying wage records become harder to obtain. Before you can identify any of these issues on your own account, you need one document the SSA does not send automatically and that most beneficiaries have never requested: your complete Social Security earnings record and benefit calculation statement, also called your Social Security statement. You can access this online at ssa.gov by logging into your My Social Security account. Download the full statement, not the summary. The full statement includes your year-by-year earnings record going back to your first year of covered employment. Take that statement and compare every single year of posted earnings to your actual income. Use your tax returns, your W-2s, any income records you have kept. Write down every year where the SSA's number is lower than what you actually earned, or zero for a year you know you worked. Do this before the end of June. That list is the foundation for everything else I am about to cover. The third issue I want to cover today affects married couples, and it is the one that most frequently produces the largest dollar discrepancy between what a senior is receiving and what the law requires. Many married seniors believe their spousal benefit was calculated correctly at filing and is fixed permanently. In some cases, it was not calculated correctly. In other cases, a change in the higher-earning spouse's benefit after the spousal benefit was established should have triggered an automatic upward adjustment that the SSA never applied. Here is how it works. A spousal benefit is calculated at up to 50% of the higher-earning spouse's primary insurance amount, the benefit they would receive at their full retirement age. If the higher-earning spouse's benefit was later recalculated upward due to an earnings record correction, a post-filing adjustment, or any other recalculation, the spousal benefit should have been recalculated upward proportionally at the same time. When the SSA fails to apply that spousal recalculation automatically, the lower-earning spouse continues receiving a payment based on the old, lower figure, indefinitely, without any notification that a higher amount was ever triggered. I have seen spousal benefit recalculations add $180 to $300 per month to a payment that had been fixed for years after a single written correction request. For a couple in their late 60s or early 70s, that is $2,160 to $3,600 per year for the rest of their lives, plus retroactive recovery of every month the correct amount was not paid. Additionally, and this applies specifically to seniors born on or before January 1st, 1954, a subset of people born in the 1950s were eligible for a strategy called restricted application. This allowed them to claim only the spousal benefit while their own retirement benefit continued to grow by 8% per year. If you were born before 1954 and you did not use the restricted application at filing, speak with a Social Security benefits counselor about what options remain. Here is the action step for every married person watching this. Request a benefits verification letter from the SSA for both you and your spouse. Compare your spousal benefit amount to 50% of your spouse's primary insurance amount as shown on their letter. If your spousal benefit is less than that 50% figure E and you filed at full retirement age, thus, request a formal benefit recalculation in writing before this month closes. One conversation prompted by this video could recover thousands of dollars in retroactive payments and add hundreds of dollars per month to a fixed income, permanently. That is worth more than almost any other 5 minutes you could give them today. Subscribe to this channel so you are never the last to learn about a Social Security update that has a direct impact on your monthly payment. June is not over yet. You know what to do. I will see you in the next one.